I'm just going to do the computer. There we go. Okay, so if anybody has anything that they want me to go over, feel free to let me know here. Otherwise, what I do want to go over, otherwise, is our trade today that everybody knows we took because we were blowing up the Telegram all day about it. So, um, I guess I can start there, and then everybody has, um, as anybody has any questions, feel free to ask away. Feel free to let me know if there's anything that you do want me to go over. But otherwise, I'm going to start off with going through our trade today. So, and the reason, a note that I want to make about this trade today is if you're in the Telegram or if you were paying attention to the Telegram, you know that we got absolutely slaughtered today by this trade. And I feel like kind of a um, common theme with a lot of people who are in my position, I guess, or even in a much higher position than I am, is nobody wants to go over their losing trades. I see it on all of the YouTube influencers and everybody. Nobody really wants to go over losing trades, but losing trades are what really teaches you way more than what the winning trades teach you, right? And so I want to go over our losing trade because I think that that's an important thing to teach. And when you dismiss that, it kind of creates habit for new traders to kind of overlook their losing trades. And so I want to set a good example for people who maybe are a little bit newer as well, that you should always go back and look through a lot of the trades that occurred for you. So um for me, this trade, I kind of was riding off of our old analysis off of this W that we took, right? And so I already let myself get into my own head because I was kind of riding the high off of that W that we had on this trade. And so um something that I kind of had believed that would happen is I do see a little imbalance down here. I hadn't drawn it up yet, but I did see we have a little imbalance down here on this candle. And if you were on here yesterday, I believe I went through what an imbalance is, but you can see that there's no wick. Here, let me clean this up a little bit. So right in here, I'm measuring it from the top of the little tiny wick on this last bearish candle. Top of the wick on that last bearish candle right here. This is the last candle that sellers controlled the market. And then the bottom of this bullish candle here, because the sellers had to push the market down. This is as far as the sellers could push the market down before allowing the market to continue up. So there's this little imbalance that I feel like needs to be filled in this area here. So even though it hit our target and it collected this point of interest already, I saw a little bit lower of an area that this could come and fill. So that was kind of something I had looked at where I believed we could see see the market travel to. So another thing is with this liquidity, yes, the market grabbed this liquidity here, but I thought that I had kind of made the assumption that with the news that happened today, we were going to see a big FU from the market or big FU from the institutions, which we did. We saw a huge FU from the market. They pushed way up above where the liquidity sat and where sellers' positions were at, pushed way above to stop everybody out. And then the market did come back down. Now, we got in our positions. I think my position was at 25. So I'll put a little line here. If I remember that correctly, I believe it was around 25. So my position was right here. I'm going to make it red so that we know that it was a sell. So I was in my sell position right here on this candle as it was traveling back down. So I easily could have collected my bag once it got to the bottom of this candle. But again, I kind of psyched myself out with thinking that we were going to see a bigger correction downwards than we ended up seeing. So I didn't allow myself to get out of this trade. Now, trade management, like I said yesterday on yesterday's call, trade management is something new to me and something that I'm diving into more and working on a lot more, simply because um this is a much different ball game for me than the first few years that I spent trading. I spent the first couple of years trading binary options where you really didn't have a leg to stand on. You kind of, once you took your trade, like, you're in that trade. You got out of the trade once the market took you out of the trade at the end of your time expiration. And so this style gives you a lot more control of your trades. And so that's something that I'm learning to manage. But where I could have done a lot better with trade management is, I could have said, here we're testing this old high, and it began to reject back up. Now, one thing that I could have done would have been taking into consideration that this candle, which would have been 30 minutes after the news hit, this candle pushed up and it completely engulfed our bearish candle down. So that's something that I could have taken a note of, and I could have cut my losses right there. So that would have been a 40 point deficit. So $40 for every 0.01 lot size taken. Unfortunately, my L was quite a bit heavier. My lot size was a little bit larger. But I guess another example would have been when we did come back down here. We did come back into profits a little bit, but it kind of bounced right at that 33K mark that we were using prior as a resistance, right? We were using that as a resistance. That was where we had our target set for that entry point that we took. So we knew that that was a resistance, and this completely blasted right through that resistance, and then it disrespected that resistance, 3 times before it came back here. So we could have collected our bag, a small bag, right at 33K. It would have been 25-point move for every 0.01, or $25 move for every 0.01. But once it rejected off of that and came back up here, even if we wanted to sit in our drawdown for a little bit, this candle right here, we had a lot of liquidity being built up right here. We had a lot of rejection here. I don't want the whole thing highlighted. One sec. So we had liquidity being built up right here, and something that I know, like something I know for myself, is reading these candlestick opens and closes and where the wicks are and where the wicks sit. So we had liquidity being formed here, and so if we didn't collect our bag there and we were in drawdown, we need to know when to be able to cut our losses short and when to realize that our trade is not in profit and when our trade is not abiding by our analysis. And so I could have easily, if I had been thinking clearly and not so biasly, I could have closed out my position here when I saw that this candle completely engulfed the 2 previous candles here and closed above the wicks here and closed and made some new highs here. So that's another instance where I should have been more aware and I should have been less emotionally attached to my trade, and I should have gotten out of my position here. This would have put us at roughly a 50-point loss. And so, again, I did not do that. And you can even see here even more so, comes down and it's starting to test these as these past resistance as a little support. And then what did it do? It slapped us in the face for being attached to our trade, and it continued to work higher and higher to that upside. So the news did, in a way or in a sense, the news did do what we wanted it to do. Is it brought it up like we wanted it to, or like I had expected it to. It brought it up above all of these old highs, and then it brought it right back down. But it happened all so swiftly and so quickly that I just didn't believe that the move was really there. And so because of that, I held on to the trade a lot longer than I maybe should have. So that was my lesson today. Is not being so married to the analysis, especially with news going on, with the stimulus being going on, just being aware of what's actually happening and what's going on, because there were a lot of signs that still told us, or still told me, that the trade was valid. I mean, if we look at, let's look at the DXY during that time. So hold on before I switch over to it. When did this happen? 1300. So at 1300, DXY. At 1300, I imagine that's this candle. Yep. The dollar got slaughtered and it continued going down, 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 down. So we thought, it was sensible, I guess, in my eyes, to believe that US30 was going to follow suit. But, we found out very quickly afterwards that it wasn't respecting the dollar index. We found out quickly, we could have found that out on this move back up here. I mean, we could have easily found that out and realized and been conscious of the fact that this wasn't even correlating with the dollar, or even on this candlestick when it shot back up. You didn't see any sort of retracement on the DXY like US30 had. I mean, this thing fell off a cliff and never came back, whereas US30 bounced back pretty much immediately. So that would have been an indication that things are not correlating, and that we have to be aware of that and be conscious of that. So just a couple of notes, I guess, there where maybe we could have handled our trade better, or managed our trade better. And I'm not an egotistical person. I'm not afraid to say that I took an L today, or that I had lost today, because the losses are going to happen. And so I would rather expose myself or incriminate my own losses to help everybody else learn than to try to hide behind my losses and only focus on the wins. So do we close your entry? I closed my entry before I got on the call. Yeah, I had to. I couldn't stomach it anymore. And, I had to come to terms with the fact that, my analysis didn't pan out. So, something to note is, like, if we would have closed our entry here, we would have taken a 40-point loss versus, a 150-point loss. And, we can always find another setup and always get back into another trade. So, Christian, can there be an intra-call to traditional Forex, like using MT4, placing trades, funding accounts, etc.? Yes, absolutely. We should absolutely do that, I believe. Yeah, like I said, I apologize. Like, I wasn't really prepared for this call tonight. So, you can fault me for that, but I definitely do think that would be really important for a lot of us and for a lot of people to hop on and learn all of that stuff. So how profits and losses are determined. So it depends on what you're trading. Every currency pair has a different valuation. So with US30, it's pretty cut and dry, at least for the broker that I use. Every 0.01 lot size. So if you take the smallest trade that you're able to take, every dollar that US30 moves is a dollar of profit or loss that you acquire. So US30 is really simple in that way, that it's just a dollar for every 0.01. So if you have a 0.02, then you are looking at $2 of profit or loss for every dollar that US30 moves. Does that make sense? And you can always scale it up from there. I'm not gonna lie, I do like the looks of US30 for a sell right now, and I hate that I say that after, especially after going through the loss that we had to eat today. But I do like how this looks with these little tweezer tops at the very top of this. That's not enough confirmation for me to take an entry, but it is enough for me to at least look into some more analysis. When with US30 trading at all-time highs, it's really tough. I know that Tyler I don't know if he's on this call. Tyler Dustman today asked me where my stop loss was. And, Coach and I were in the same boat. Like, Coach said he didn't have a stop loss, and I didn't have a stop loss either. And after I started looking at the charts, I'm like thinking to myself, like, there is no ceiling for this. There is no like viable stop loss really. So I didn't know how to answer it. I didn't know what to do with it. But yeah, I mean, the 5-minute even would have been a really, really sweet spot for us too. So, new price discovery. Yeah, exactly, Gary. It's all new. This is all new territory. This is never seen before territory for US30. So, it's hard to calculate a stop loss on that. I'm not gonna lie. But I do like the way that this looks. We're getting a cross down on our RSI as well. So who has a MT4 broker funded on this call? We got 16 of us. Anthony, I know you do, bro. I know you do. Dan, what's good, dude? Dude, unmute yourself. Here, I'll make you co-host.
Damn, bro, I just woke up, man. You already know the vibes.
Why is it that whenever we hop on a call after 9 p.m., you're saying you just woke up from a nap?
Because I like to take naps during the midday because I'm a free man, because I'm a full-time trader.
That is awesome, man. That's hilarious. I
gotta be up for Raja's call at 5:30.
Yeah, I know. I'm gonna tune in with him tomorrow too. But I kind of just went over our or my hefty L from today.
I'm glad that I did not get in that. I'm not gonna lie.
You what?
I'm so glad I didn't get in that.
Yeah.
And that's mainly the main reason I did not get in there, because I definitely was respecting the sentimental analysis you guys were using on it, not really having like a support resistance area or anything. But the reason I didn't touch it is because I'm only touching currencies with traditional right now, because I don't feel confident enough to be inside of indexes or taking trades on crypto without having more experience.
That's fair. That is fair, my friend. I might hop in a sell right here. If it goes up to like 180, I think I might do it. I think I'm gonna get ready to take this. Shoot, this might be it right here. Oh, there it goes. So if anybody wants to scalp US30, I'm literally going to take this. Like I said, I think I'm going to look for it at like 180. And I'm only looking for about a 10-point move or so. So once I get my 10-point move, so that would mean when it gets to 170, that's when I'm looking to close it out. And it's already moving down on us. I did not catch an entry on it yet, but it looks like it is starting to move towards the downside here for us. And finally start to make that move back. I thought that Luis was going to join us tonight. Dan, you know Luis, right?
Yeah, he's right here. He's in the chat. He's
Oh,
right
hey.
here. I can see him, Luis Rodriguez.
There he is. Here, I'm gonna make you co-host, brother.
I don't know what he's up to. I know he's got himself muted. There he is.
Hey.
Got the real goat in the house.
Yeah, sorry guys. I've been just catching spikes like crazy in Euro UBP right now.
Love it. Gotta love it.
Yeah.
It's nice to meet you, man. I have heard nothing but good things, and I appreciate the knowledge that you've brought in, and I highly respect the grind and the experience that you have. And so I'm really grateful that you're willing to hop on a call with us here and to share some of that knowledge and provide some of that knowledge for some of us that haven't been trading as long and don't have the experience that I know that you have. So thank you very much for being here, first off, man.
Awesome.
Hell yeah.
I'm here to have fun with you guys in trading and help as much as I can for any person that needs support, and get it going as quick as possible. Because I know there's a lot in this market to learn. That's it. Yeah, that's the thing that I like the most. That it's so wide. There's so many things that you can do to make money on this. And the first time I started trading, obviously like everybody else, like there was a lot of losses at the beginning. But once I got a good mentorship from the right person, things started working for me, and I hit my 7 figures within the first like 3 years, and from that point, everything has been like profits and a lot of fun.
Yeah, I imagine so. And I know that you had some good nuggets for us earlier that I was curious if you would touch on, as far as what you were talking about with these strike zones and how to avoid having your stop losses hit, and how to and how to manage your risk a little bit more within your trades, so that you don't have to experience the heavy L's that we had taken today.
Yeah, well, first, everything depends really on the strategy that you're using. Every strategy have their ways of managing their take profits and stop loss. In my case, I have certain things that I like to work on, because with over time I learned that to me they are the one that give me the money that I accumulated in time. But really depends on the strategy that you use. Like I just watched what you were doing there. I mean, it's really good. I mean, it's really good. But I was going to ask you, how do you determine your TPs on it?
The take profit on the sells, the take profit on my sell for today was a point of interest where, here, let me get a naked chart going. Our point of interest was around that 860. I think mine was a little bit lower. Mine was around this 840 level. Yeah. So mine was around this 840 level, kind of right down here. And I guess the reason that this area stuck out to me was that there was, we see that the market came down and then there was kind of a battle. It wasn't a direct rejection back up, but there was kind of a battle in here. And so for me, what that tells me is that there's still sellers entering the market in here as well as buyers. And then, the buyers were the ones who kind of came out ahead on it.
Okay.
And so the idea, I guess, for me behind that is that the sellers in the market here, or the bigger institutions or big players in the market, they still have sell positions open down here that eventually they would want to bring the market back down to close it out, so at break even, so that they don't have to collect any losses. And so that area for me was a good point of interest, just for the, where I believe the market movers could have brought the market back to in order to close out their positions with, or positions that they had. And so, and I mean, even, after that big move up, I see, this point of interest here as well, where there's, that bearish candle that is where I believe sellers, are the last point that sellers had been entering the market. And then the news hit and we had the big bullish move to the upside. And so, for me, that's kind of where that's how I like to calculate and look for my profits or my points of interest. Is I like to see where there's sellers still in the market. And then I look at, my analysis to see, when is it going to travel back to that area.
Okay.
So that, I guess, was kind of our thinking behind that. And obviously, today it didn't quite play out that way as cleanly as we wanted it to, or it wasn't ready to come back and head down that way for us. But yeah, I guess that's why that take profit was set in place. The last trade that we took the other day, the one that did play out, was the same thing actually. So, this is an instance where it did work out in our favor. As we have, again, that indecision area here. And so I like to take, my exact price point. I like to take the top of the last bearish candle. I like to take the open of the last bearish candle before that impulsive move up.
Okay.
So that was right at 840, and that's where I had my take profit, was 840. And then we collected our analysis to gather when the market was going to turn. And sure enough, we grabbed our entry right at that 33,000 flat level. And it doesn't always work out as cleanly as it did, but you can see once it hit it, it came straight down. And then as soon as it hit that take profit, that's when the market kind of started to range in this area before eventually.
So you are doing this analysis because you are scalping, I'm assuming?
Yep. Yeah. I like to be in and out of my trades in the same day. Yeah.
Same day.
Yep.
Okay. So my question to you is why you analyze the market in the 5-minute time range?
Well, I actually, to find I like to kind of hang out on the 15-minute actually, but the 5-minute, I guess the lower the time frame, it kind of just tells me a little bit more. How do I word this?
You want to see
It gives me a little bit more precise or more precision, I believe, dialing into the lower time frames. It helps me find like a kind of that exact point of what I'm looking for. So on that instance where there's that take profit at 840 here, if I were to look at it on a 15-minute, where did I go now? Here we are. So if I looked at this on a 15-minute, it doesn't quite tell me quite as much. I mean, I guess in this case, it's right at the top of this bullish candle, but it kind of, this wick also in here kind of, I guess, tells me that there's a little bit of a range in here or a little bit of a battle in here. But on the 5 minute, for me, it just looks a little bit clearer that there is indeed, sort of a battle for the market in this area, a short-term battle for the market.
Yeah.
And so I guess I want to find where the, like I said, like that last bearish candle where the sellers last held control of the market before the impulsive move up. And on that 15 minute, if I were to look at it on the 15 minute and I were to look at that last bearish candle before the impulsive move up, then, my price target would have been way up here at 869. And so it kind of just gives me a little bit more, like I kind of said earlier, a little bit more precision as to where I believe the market's going to travel to.
Okay.
Am I I guess is that valid analysis, or is that
It's a valid analysis, but possibly what I see wrong is the fact that you're scalping for 8 hours. For that type of analysis that you did, I would say 4 hours is good.
4 hours?
Mm-hmm.
Okay. And this was the old trade for sure.
What's that?
This was the old trade that we did capitalize on. But yeah, today's trade, we definitely sat in the market a lot longer than was comfortable for sure.
Yeah, for scalping, you got to be really careful how we do things, because sometimes we do really good analysis, but we sit for too long in it. And sometimes our take profits are way above where they should have been for scalping. I mean, I really like what you do. Like, I really, really like the analysis that you do, but I believe you should consider maybe taking shorter time for your scalping and possibly avoid news. What news source you use for your, before you even do anything?
With US30, I watch Bloomberg.
Yeah, Bloomberg is good. Another good source is Finbits.
What is it called?
Finbits.
Finbiz?
I'll type it in. It's a really, really good place where you can get all kinds of news.
Okay.
Finbits.
Yeah, and I guess so that I guess what you're saying, I really appreciate the constructive, feedback, and I certainly have, no issue with, you picking apart any analysis that I have. So don't feel like you have to filter anything or dilute anything. I'm more than happy to receive the value and the constructive criticism. So I guess that shows my lack of experience, because when I first started learning to trade was, with binary options that you're now becoming familiar with. And so with binary options, the timing is fixed. I don't really have to, I never really had to take into consideration, the control. I didn't have the control of the timing like I do now with traditional style of trading. With binary options, it's all time based, and so you preset your time, and then that's the amount of time that you're in the market for. And so I guess that's where today my lack of experience in that area was exposed, because yes, we were in the trade far too long.
Yeah.
And we were in the trade even after the breaks and everything that the market took today. And so I guess that's an area for me to grow on and expand on, is not only trade management, but time management as well. And so do you have like, so how, I guess, do you determine when time is up? or like, when the timing, when does like the timing start to play a factor and play a role in what is like, or how do you before you take your trade, how do you determine how long you're willing to let the market work um before you just
Well,
believe it's going to take?
the first thing that you gotta do is get familiar with something that you like. Let's say US30. Quick example. You can take gold, you can take silver, you can take whatever you want. You gotta get familiar with it. You gotta know when the news are going to hit whatever you're doing. For example, in my daily routine, when I'm doing this kind of stuff, what I will usually do, I know how the one I really like is gold. That's one of my things, gold. I know how gold moves. I know when there are news at gold that could affect my trades. So I work on a schedule, right? So what I would do, I would get up first thing in the morning before any news or anything that will happen, and I will read what's going on the market to understand how is that going to affect me on my trades, right? So if I am doing day trading, and I'm just gonna pick a quick example, gold, for example, I will place my trades right before 8 a.m. my local time. And from there, I will expand it all the way before noontime, because at noontime, I might get some sort of news or something that will possibly get me out of profits. I know how gold moves. And gold, they have something that we call rallies, where we could be in one position and within 1 minute just like move really fast.
Right. Yeah, gold's another wild card for sure.
Yes. So you either trade with the rallies, which is really good, or you avoid them. If I'm looking for example, if I'm scalping it for, let's say, 4 hours, I would try to avoid it. That's when I would possibly put trades with higher lots, because I'm literally just want to go in and out.
Hmm.
And if I want to trade with that, I maybe pick smaller lots, where I just want to get a lot of pips, but with smaller lots in case that the trolley goes in the opposite direction.
Right.
As I said, I cannot remember the last time I took a stop loss. That's how long it's been. Because the other part that I do is that I set up my trailing stop. So whenever I do an analysis and um, I get out of my strike zone, my trading stop automatically move to it to cover it. So I never hit my stop loss. I never get into a trade with a stop loss. If the thing decide to go in the opposite direction, it gets me out in profit instantly.
Gotcha. Gotcha. So just move it as soon as it starts to make that move in your direction, you just immediately bring it to break even.
Well, I do a percentage of it, because obviously you need to leave some room for the price to move, right? You know, the price move up and down. So I usually do a percentage that if it goes above a percent, to move it automatically to cover my strike zone. And then if you move higher, to move another 20% and so on. So it's constantly moving right behind the price.
Right.
And that's why if we decide to go to drop or do whatever they want to do, it will get me out in profit. Always. I'd rather go out in profit than go in negative, regardless of what it is. And because I put in usually big lots with this. I mean, if you're doing a small lot, possibly getting 10, $20 is something is significant for you. But when you're getting out with like 5,000, 10,000, 3,000, it's something, right? Rather than nothing.
Hmm. Yeah, and I think that's been, it's one of those things that like it's something but not always, it's where common sense always isn't always so common. Is I always we always want to we always want that trade to work out, and we like sometimes I've found that it's almost like I'm acting like there is never going to be another trade. Like it has to be that trade. And so I don't allow myself to bring that stop to break even, or I don't allow myself to collect some partial profits and stuff like that. And in doing so, more often than not, it'll bite me in the butt. And so I know that that's, another area that I need to continue to grow in, is knowing that there's always another opportunity. And so if, when you do trail your stop, even if it does come back, at least you're still collecting some profits. Maybe it does travel to your take profit, but being willing to cut that trade short in profits versus having it completely turn on you,
Correctly.
come back the other way is
I always set up my take profits like smaller than usual, so I know I'm good with it. But I set up many, like possibly like 4 of them. That way I'm constantly moving it. But if it decides to go in the opposite direction, it would get me out. At least it will cover what I put in, right? And I will get out in profits. Now the other part is determining your stop loss. Having a stop loss, the way I see it, it's just a way to protect my account. I take really big risk on when I'm trading. But what happened is on a lot of setups that you do, you need to understand what's really happening behind what you're doing. And you got also traders that know what you know, and their job is to actually make money every single day. So in a lot of setups that happen in the market, and again, everything depends on what you're trading. For example, if you're trading on Forex, you know that you have institutions, mutual funds, all that kind of stuff behind it. And you got there a lot more attention because it's very volatile, right? So, for example, if you're trading Forex and you're setting your stop losses, the way I do it, I always set them up a lot lower than the expectation, because those traders, most of the time, they go in the direction of your stop loss just to take you out of it and then go to whatever they're supposed to do based on your analysis. So I always take that risk of putting my stop losses a lot lower than usual just to protect my capital, but not to really like, oh, well, if it hit this point, I don't want to lose more. I'm willing to lose more, but I know the analysis that I'm doing is good and it's going to go in the direction that I want.
Right.
So that's another way of me dealing with the stop losses and not losing money. I mean, I've been in many trades that I go deep in negative, but then over time it just goes exactly where I want it, and then that's when I take my money out, right?
Right. Yeah, and so you're avoiding the stop loss hunt
Exactly.
by setting it a little bit lower
Mhm.
than where you believe the rest of the traders are setting theirs.
Mhm.
Gotcha. Interesting.
Yep.
And I guess when we're
If
dealing
you take,
with smaller accounts, or maybe accounts that can't handle as large of drawdown to set that lower stop loss, it's just managing your lot size and your risk.
managing your lot size, correct. When it's like a smaller account, how can I break this down? MT4, the way I see it, I don't recommend people to start with it with like low capital, because the benefit that you're gonna get from it, if you do high frequency forex, you can do it a lot faster. You know what I mean?
Right.
The reason why I really like the setup that the academy has is because they start with the basic. You can start with in high frequency forex, man, with $100. And believe it or not, you can grow that to 1,000, 5,000, 10,000. If you start an MT4 with $100, you can make it, but you're gonna be like a snail, like literally like a snail.
Right.
So I always said, start with high frequency forex, and once you hit that, 10K mark, diversify in 100% and start investing in MT4. an MT4 or either MT5, whatever you're doing, minimum, I always said to start with either with 5,000, 10,000, so you can play with it. Because if you don't, then you're gonna be really running into really tight positions,
Or you're gonna be making pennies.
or you're gonna be making pennies. You're gonna literally. I'd rather go and flip burgers because I'm gonna be making $10 an hour at least than what I'm gonna be making on MT4 with $100 account. You know what I mean?
Right.
You're probably wasting your time. And people say, "Well, I'm gonna put $100 just to learn." Guess what? You can get a demo account if you want to learn, right?
And
But
that's
yeah, I, to me, when I started in this, I didn't have binary around. I didn't even knew what was binary. I started right from the get go with an MT4, and I went through all the fires, and and that's what I can't speak about it because I lived through those things when I started. But yeah, highly recommend starting an account with 5, 10K and go from there, so you can actually see profits.
Yeah, and I've kind of come to that same conclusion as I've cleaned myself of a few MetaTrader accounts so far.
Yeah.
I've come to that same conclusion that it's just, especially when you're trading something like US30, where the volatility is so extreme and it moves so abruptly, and the leverage, when you're trading on margin as well, there's something to be said about that as well. And so I've definitely come to a very similar conclusion very recently that this is a style of trading that you do want to have some capital to play with, so that you can, like you were saying, allow yourself that drawdown, but also at the same time you're giving yourself a chance to make good money off of it. Because if you're sitting here and you're taking a setup and you're $8 in profit, you're gonna be like, well, no, like I want it to go higher. I want to make more than $8. And so instead of collecting that $8, whereas if you had 10 times the account and you're like, all right, I'm up $80, or 100 times the account, you're up $800. You're like, all right, like I'll cash out. $800 can be a car payment or rent for some people. So
Definitely something.
that's a lot more satisfying,
Mhm,
and you're a lot more willing to kind of take your bag and run,
mhm.
versus an $8 trade. You're just like, all right, yeah, I'm moving at a snail's pace, like you said. So
You got to take in consideration as well the benefits that you get through trading in these kind of platforms. Because when you do binary, you're limited to the percentage that the broker is paying you. It will never exceed no more than top possibly 90%. But your losses are going to be at 100%.
right.
Plus, you got the time against you. With MT4, man, like in one single trade, you can get 200, 300, 500,000% depending on the account that you have. So you're placing trades with small risk and higher profits than binary. The only difference is that in binary it's fast, you know, but the risk is a lot higher, as we know.
Gotcha.
Mhm.
Dan's asking a question here. Have you gone over lot sizes and how much each lot and leverage is? Can you go over leverage with everyone?
I could, yeah, but honestly, it's a lot easier if you should use a calculator. Like, because like that's the part that most people get confused on knowing how much you have to invest depending on your capital. Let me see here.
There's a good app that I was shown. It's called Stinu, Stinu. And what you can do with Stinu is you punch in your account balance, you punch in the amount of pips that you're, from your entry to your stop loss,
Mhm.
and you type in the percent of your account that you're willing to risk, and then you choose the pair that you're trading, and it'll automatically punch out the proper lot size. So let's say I'm willing to risk 4% of my account, and I've got a 10 pip stop. and I'm trading gold, well, then it would calculate all the lot sizes out for me, so that, you know, if it hit my 10 pip stop loss, then I would lose 4% of my account, no more, no less.
There's
And
tons of calculators that you can use online.
yeah, the calculators can be very, very helpful.
Hmm.
Thanks, Gary. I'll yeah, forextime.com, it looks like, is a pip calculator. Perfect. Perfect. Yeah, there's another one that I know, another one online that it's called myfxbook.com. That's another online tool that you can use for position sizes as well. Yeah, no, I appreciate this lesson for sure. I'm more than happy to be the guinea pig. I know that this is helping a lot of people, not just me. So I really do appreciate you taking the time to hop on here and drop some nuggets for us.
Yeah, I mean, if you guys want, I can take a day, any day, and just go over specific things and show it publicly how it works. I can give you a course of how to calculate your lot, but then at the end you're gonna realize, damn, this is too much. I'd rather just use a calculator. But if you want to know the basics, I mean, I can show you. Take a few, maybe a half hour, an hour, and go over it.
Yeah, that would be great. I think a lot of us would appreciate that. I know a lot, and this call is recorded too, so this will be something that everybody's able to refer back to as well. So I know that there is a lot of value for me on this call. I think that this could be a big help for a lot of people. But yeah, in the future, you know, if not even on a call, like I for sure will have many more questions for you to come. I will want to be picking your brain, I'm sure,
We can
pretty
go for
constantly
setup
until you
too.
get sick of me.
Every night if you want to. I mean, I normally do the setups either on like weekends, like Saturday, like Sunday, just to set up the whole week, or possibly like early in the morning, like really early in the morning. But it's been possible now like 2 or 3 weeks since I haven't done much on that. I'm taking it easy right now, just doing binary with some of the guys here and having some fun.
Yeah, for sure. Binary's a rush, man. It is fun. It's like a video game.
Pretty much, yeah. Yeah, we have a lot of fun with that for sure.
What's that?
I said we have a lot of fun with binary for sure.
Yeah, and I know Dan who's on this call. He's become quite a master at it. I remember when Dan was first learning how to trade binary, and to see him develop into the trader that he is now has been a pretty cool process to see. So yeah, man, I appreciate your time. I know I don't, due to the recording sake, I don't want to make this much longer than an hour, but yeah, if it's okay with you, I will definitely be reaching out, and I would love to hop on while you do your markups for the week and everything,
Oh, yeah, definitely.
and just kind of pick your brain more so on it all.
Mm-hmm.
Dude,
36 out of 41.
One thing to say, Kyle, thank you for that. But let me tell you guys something. I've hopped on with Luis on a Saturday and we marked up Bitcoin, and I've learned so much in that little hour just listening to him. And I think it was your buddy Carlos.
Mm-hmm.
And it was just absolutely like my pen was on fire. So absolutely great times. And I give it up to Luis. I have learned so much from him because he knows how to analyze different indicators in different ways than we've been taught and how to use them. And it's been an absolute blessing.
I'm also a big fan of automation. So I create my own expert advisors for this platform. Like I code my own stuff. So that's a different level that we can also take a look of certain things.
Yeah, that'll be awesome. That'll be badass.
Mm-hmm. Mm-hmm.
Yeah, man. Well, I'm excited to work with you more, man. It's been, you know, it's been awesome to, you know, host this call with you, and to you know, receive some of the knowledge and a lot of the nuggets that you've provided for us today. And I highly appreciate it. And I'm excited to continue racking that brain of yours, and Yeah, and just you know, absorb and become a sponge as much as I can from an individual like yourself. I feel like I'm very blessed to be in a position to be working with you. So thank you again. And Dan, I don't know if you have anything else, or Luis, if you have anything else that you want to go over, you want to say before we end the call for the night.
No, I'm good.
Sweet, sweet. All right. Well, I hope you guys have a great rest of your evening. Yeah, I know you think you're an hour ahead, Luis. So thanks for staying up late and rocking with us here today. But hope everybody has an awesome rest of the evening, and I will see y'all in the morning.
So.
Peace.